Innovative Industrial Properties, IIPR. Should you be afraid? Today I am going to present the bear case about reasons why this stock should be sold, it should leave your portfolio, and you should get the heck out of this stock immediately. Now, it's also important to note that I do own this stock and I do like to present a balanced perspective. I will be presenting the bull case for IIPR and an explanation about why I still continue to hold the stock later. But here I just want to present the bear case, some of the reasons why you should be afraid, or you should be concerned, and you certainly should be doing your homework and ensure that this stock fits your risk profile. Okay, so we are going to look very quickly at exactly what Innovative Industrial Properties is investing, what their assets, their buildings, their facilities are actually worth, and then we're going to look also at the rent that they're claiming. What is it that their tenants are paying, and are the tenants really going to pay? And between these two issues, I think you'll see that there's some definite cause for concern and definite cause here to be a little bit cautious about the stock and where it is going. Alright, first off, where exactly does Innovative Industrial Properties operate? So this is a map drawn from their website, and so you can see facilities scattered all the way from Seattle, an isolated facility, down to California, Arizona, Denver, and Colorado a little bit, and a heavy presence over here on the east coast as well as down in Florida. Now obviously not every state has legalized the use of cannabis, and so you could argue that there's more opportunity coming, but it's also important to note where they are operating at the moment for the reasons of sort of beginning to get a sense of what the cost is of these facilities and what the cost should be for these facilities. Okay, and now here on the investor section of the IIPR website is I think the press release that had everyone flustered a week ago, and caused quite a steep sell-off, I think, in the company's stock price. So this is really looking at the quarter four and full year 2022 operating investment and capital markets activity, and there's a couple of really important things to note within this. Hit subscribe and become a better dividend investor today. Couple of key points: 110 properties, 19 states, 8.7 million rentable square feet, with another 2 million almost rentable square feet under development or redevelopment. Okay, so let's look at some of the really important things here. These bullet points here, in my mind, are standing out quite as key points here. So a weighted average lease length of 15 years, so a reasonably long lease length. Now, on the face of it, that sounds good. Normally when I am looking at a REIT investment, that is something I'll be looking at and salivating over and thinking, hey, that sounds good. And let's have a look at this here also, the total invested or the committed capital per square foot of $274. So let's keep those statistics in mind for a second. So what does it cost to actually construct, say, an average industrial warehouse? So we're not thinking here about cannabis growing or cultivation specific facilities, but just a basic general warehouse. Take this with a grain of salt. We've got cost estimates here from about $200 a square foot in San Francisco and similar in Portland, through to Denver being about $140 per square foot, with much lower costs in, say, Phoenix and Las Vegas. So it gives you a sense that the cost per square foot is not going to be uniform over the USA. But if you note, these costs per foot are also substantially under what IIPR is noting on the press release. Now just checking on another website as well here, for example, warehouse manufacturing facilities. A warehouse will depend obviously on what the facility is storing or making, but a sort of a general regional distribution centre is going to be just over $200 per square foot. So these are relatively up-to-date figures, and they're a little bit lower than what we saw on the press release from IIPR. So what is it that IIPR owns that is actually worth money? Well, it looks like they appear to be sort of investing or overly committed in terms of capital per square foot relative to the cost of actually owning these facilities. And it looks like if they were able to rent that facility with that investment per square foot to the tenant for the full length of the lease, then it looks like this is going to do very, very, very well, and they'll probably make a very healthy profit. And they're essentially in this way transferring or providing funding to a type of business that cannot otherwise access capital and access loans, and that seems to be the big difference here in terms of the total invested per square foot. So they're basically providing a source of finance to their tenants, if you will, and that's going to be profitable if and only if they're able to really maintain a long lease length. And that's going to be the big question here is, can they actually achieve that? Now, on the face of it as well, they have been fairly careful with their investments. They are well diversified, as we saw from the map. No tenant represents more than about 1/7 of the total portfolio. Similarly, no state is overrepresented in the portfolio. So there's an absolutely, they've done a good job here. But what does this actually mean? Well, the big part of what they do, however, is still this industrial use, and that's most of their facilities. So let's just ignore retail and combined retail industrial. Let's focus on the bulk of what they do, which is this industrial cultivation and or processing, which is kind of similar to a basic warehouse. Now, this is where I think we need to be a little bit careful. So look, rent collection and deferrals. So rent collection, they collected 92% of their rent for the month ending January 31st, 2023, which is, it's not bad. They collected most of the rent for the 3 months ending December 31st. Now that includes approximately $500,000 of security deposits applied against his payment for rent for the lease with Sozo. We'll look at that down below. So essentially they're chewing through, they're not actually collecting rent, they're chewing through a security deposit instead of collecting that rent essentially. So that's not necessarily a good thing either. They're not actually collecting that rent. Now, one of the nice things here is the leases with King's Garden do appear to be doing better, and a lot of those problems appear to have been slightly better managed over the last few months. But is it enough? And this is a big problem. So here we go. As of January 18, SH Parent or Incorporated or Parallel is in default of obligations to pay rent. Now, admittedly, this is only at one of the facilities, but it does represent approximately 3% of the invested capital, and they note here that rent was paid in full on all the other properties leased by Parallel. Similarly, Green Peak Industrials or Skymint was on default of obligations to pay rent at the property in Michigan, which is approximately, again, coming close to 3% of IIPR's invested or committed capital. And again, noting there that rent was paid in full on all the other properties leased by Skymint. Again, affiliates of Medical Investor Holdings are in default of obligations to pay rent at the California properties, or approximately just under 1% of IIPR's invested capital. Wow. Okay, so what's going on here? Now, we need to be careful here, I think. Are these tenants creditworthy? Are they solvent? Are all these tenants going to continue to be able to pay their rent? Now, this is one of the big questions that I think you need to be careful of and thinking about and considering really carefully with IIPR, because remember, what was it? It was a 15-year lease length. Now, what is going to happen over 15 years? I have no idea. You have probably very little idea as well. We've seen legislative changes across the US as well. We can argue until the cows come home whether or not these are good or valuable. But the key thing I think here is in 15 years, a lot can change across this market. And are we actually going to be able to see these tenants continue to stay in business for 15 years and continue to pay IIPR reasonable rent for 15 years, covering this cost of capital? And this is the big question. And I think we get a sense of that as we scroll through as well. So going further down, lease amendments. So here we go. Holistic. Base rent to be applied from the security deposits. So again, this is not necessarily a good long-term outcome for IIPR as well. So essentially there's some more challenges there, but noting that then rent is paid in full. Again here, base rent deferral. So again, this is another risk or another indication that not all is well. Now, if we look at this, I mean, how many of these companies are there that we've just looked at, that we've just scrolled through there? Now, no one tenant represents more than 14% of the total portfolio, and this wasn't necessarily all of the locations for each tenant that were in default, a little bit behind. What we are seeing, I think, is some fairly widespread panic there and concern about the number of the tenants for IIPR that are failing to pay their rent. Now, what exactly is the big issue here, and do we actually still need to be concerned about that? So despite the fact that IIPR is having trouble collecting rent, they are continuing to invest and continuing to add to their construction challenges. So here, for example, San Bernardo property, a reasonable size facility. They are currently evaluating alternative non-cannabis uses for the property. Wow. Now, admittedly, this is not only the changing market conditions, but also changes in the zoning of the property. Non-cannabis uses, well, they're not going to be leasing that out at anywhere near the same rent. As we saw, you know, the cost of capital that they're sort of committing at $274, I think it was, per square foot, is substantially higher than the cost for a non-cannabis use industrial property. So I think we've got some real big challenges here for IIPR. They're not going to get the same sort of revenue coming through from their tenants for non-cannabis uses, and so that severely depletes the value of this property and the value to the shareholders for IIPR. And here as well, another very, very small, I think, really, property, but there's no assurance that they'll be able to lease the property on the terms anticipated as well, as they negotiate the lease terms with the potential tenant. So some challenges there for them. Okay, investment activity. So they've made 9 acquisitions in 2022, an aggregate of approximately nearly $400 million US. They've sold an industrial property, and as of January 18, 2023, they've entered into 2 definitive purchase agreements to acquire 2 more properties for a further $63 million. IIPR, is it time to get out now? They've got heavy investments, they're anticipating very long lease terms. However, we can see a lot of trouble with their tenants. A lot of the tenants are struggling to pay rent, and we're heading into a recession. The rates at which they anticipate leasing their facilities are far above average industrial lease rates, which would suggest that if they have to repurpose these facilities, the facilities are not worth as much as we might think. All of this added together, and IIPR has some serious trouble that investors need to seriously worry about and think about. Now, is it all bad? Not necessarily. In any of these cases as well, we have to think about this. Look, this is a high risk, high return. IIPR has done well, but they've also been engaged in a fairly risky space, and that's also something that we must acknowledge. Is it all bad? No, not all bad. We will look at the bull case as well. We'll look at some of the reasons to be positive, some of the reasons to be considering investing in this facility, in this company, and we'll look at those in the next videos. So hey, look, stay subscribed and let me know what you think about IIPR below.